before you buy that call option, watch this because 90% of people who buy calls, they lose money. Not because options are broken, but because they don't understand what they're actually buying. They thought they were buying a rocket. What they actually bought was a melting ice cube. In this video, I'm going to break down what call options really are, why most people use them the wrong way, and how to actually use them like a professional to grow your account instead of blowing it up. And hey, if you're tired of guessing and want to see the real trades I'm actually making every week, check the link in the description. Inside my community, I walk you through exactly how I trade these setups for consistent monthly income. Let's get into it. Let's say you see a stock, maybe Nvidia, and it's running. You think, if I buy the call option, I can ride this thing for pennies on the dollar. You jump in, buy the $900 strike for next week. You're hyped. The stock even goes up the next day, but your call loses value. Wait, what? You did the right thing, and you still lost money. That's when it hits you. Buying calls isn't just about being right. It's about being right fast and on multiple fronts. Because when you buy a call, you're fighting three enemies: time decay, which is a theta, implied volatility crush, and the distance from the strike price. If you're not accounting for these, you're not trading, you're gambling. Let's strip this back. A call option gives you the right, but not the obligation to buy a stock at a set price before a certain date. Sounds simple, right? But what you're really buying is time plus probability. You're paying for a chance that that stock will rise enough and fast enough to overcome the premium you paid before expiration. So when you buy a call, you're not just betting the stock will go up. You're betting it will go up fast enough to beat the clock. And every single day, that clock ticks down, eating away at your options value. This is where most traders get wrecked. They didn't buy a call. They bought expiring hope. Let me show you how I actually used a call option the smart way. Back in March, Tesla was trading at around $165. I bought a long-term call, the 400 strike price, expiring June 18th, 2026, and paid $12.51 per contract. That gave me plenty of time for my thesis to play out. By July, Tesla ran and those calls went up to $50.75. That's a $15,000 gain on a $5,000 trade. Why did it work? I gave the trade time. Leaps, long-term options? So that gave me time. I chose a stock with potential. I sized it right. I wasn't looking to make a quick buck. I was executing a strategy. This is what most beginners miss. They buy short-dated, far out of the money calls and expect magic. Instead, give your trade time. Pick quality setups and think like an investor, not a gambler. So here's your pre-call option checklist. Is the stock in an uptrend, or are you just hoping that it's going to bounce? Are you buying enough time for the move to play out? At least 30 to 60 days out or longer. Is the implied volatility low enough so you're not overpaying? Are you buying a strike that's reasonably close to the money, or are you chasing a lottery ticket? And finally, what's your plan? When will you take profits? What if the trade turns against you? No plan equals no trade. If you can't answer those questions, please don't buy that call. Buying a call option isn't a cheat code. It's a tool. And just like any other tool, it only works in the hands of someone who knows how to use it. Used correctly, it can multiply your gains. Used blindly, it will torch your account. So ask yourself, are you trading with precision or gambling with expiration? Your results will tell you. So let's recap. 1. Buying a call equals betting on speed, direction, and timing. 2. Most beginners lose because they ignore time decay and IV. And 3. You need a plan, time on your side, and a quality setup. And if you're tired of learning the hard way, you don't have to. In my community, I break down every trade I make, why I enter, where I take profits, and how I manage risk. If you want to stop guessing and start getting results, click the link in the description and join us. Let's turn those call options from a gamble into a system.